Hello, everybody. Welcome to Market Moves. I'm Jason, the Wizard of Ops. Hey, everybody. My name is Jason. I'm the Wizard of Ops. And with me is Andrew. And Dark Matter was supposed to be today, but he had some internet issues. So, Andrew, how do you feel about jumping in as co-host instead of just special guest?
It's a new experience. Haven't done it before, but I'll do my best.
That's all right. It's kind of your show anyway today. So, because this week we have 5 Mag 7 earnings. And, Mag 7, one of the things about them is that they're not just the 7 stocks that heavily weight the SPX and kind of drag it to the upside at times, but they're also the 5 stocks typically with the largest notional option volume. So because of that, earnings on the Mag 7 tend to be fairly, I don't want to say predictable, but we have, when you combine Volland and ORATS, we have edge in determining what kind of earnings moves the Mag 7 can make. So, I mean, Andrew, we have 5 stocks here. Let's get to it. We do always like questions at the end, so we want to leave some time for that. So let's get to it. All right, Andrew?
Sure.
You ready?
Yep. Pop up the Google ORATS.
Let's start with Google. You want to start with Google ORATS? Sure.
Yes. Which one do you usually use, actually? Okay, so you use the A-share ones. Okay.
Yeah. All right, let's take a look at this. Oh, man, it looks like Google for 3 out of the past 4 earnings reports has not been within its implied move. It looks like earnings is tomorrow. One thing we should mention here, you can mention it, Andrew, about earnings timing with options expiration.
Earnings times option expiration. Yeah, because
we were talking about it before.
Oh yes, so the earnings expirations usually expire weekly. So that it's when they using earnings happens during that day, the option still has in play with it. So the applied move is what I was talking about. As I'm concerned, is like because it's based on percentage, so you might need to check on the spot price to see where it's expecting to be in that range.
Yeah, so I think with the implied move percentage here, what Matt was saying last week was it is a percentage of kind of excess implied volatility to what the normal expiration is. The kind of concerns that we were talking about are Google earnings are tomorrow evening. Mm-hmm. And tomorrow is Tuesday and the options expiration is Friday. Once that earnings is announced, you have a Wednesday, Thursday, and a Friday of Google moves that can alter your strike prices. So that, as instead of like say Tesla last week, it was Wednesday, so you only had Thursday and Friday to deal with as far as moves. Sometimes I think it was 2 weeks ago or so, there was a JP Morgan was on Thursday evening, so you only had Friday. A lot of, if you're trading this with options as opposed to stock or something, that's something to take into account, because having that one day of earnings move is it without any kind of interference by outside market forces on the other 2 days or 1 day or something is a bit more reliable. So when you do this kind of earnings, I usually would like to take off the option trade before expiration. But if I'm doing something like a Thursday evening earnings, then I like to do it for options expiration, and I try to hold it as long as I can, because the move realizes and then it kind of pins in that, like butterfly area, if you have that, or the long gamma is cheaper than would be on a Tuesday. So that's kind of the dynamics of options expiration compared to earnings. Do you find that kind of influences your analysis, Andrew?
Yeah, of course. Because what I do is like my Volland analysis is based on the day after the earnings call.
Right.
Unless you have, if you're planning to play stocks or shares, you can actually use exactly the volume data at that moment. If it's like you said, if it's like early in the week, I might actually sometimes use charm for the next few days to figure out like, should I continue with this play or should I close it early and stuff like that. So yes.
Yeah, that's actually a really good idea. All right, so let's get into the actual earnings analysis. We have Google. Google is a Tuesday evening earnings. It looks like, yeah, I guess 4 out of the last 5 earnings for Google have exceeded their options expected range. And last quarter, it just kind of pushed to the edge of its options expected range. What do you see here, Andrew?
Yeah, I see the same thing. I noticed that the volatility is like 37.1%, which is kind of small for a Mag 7 stock. So I guess people are not anticipating that crazy amount of changes or shock value out there. I also noticed that the analysts revisions are like up, like very positive. Like was it 3 or 9?
Yeah, it seems to be a trend though.
Yeah, but I usually use that more as a like a speculative thing than actually believing is actually very bullish. So I do put that in a note just in case, like maybe like the sentiment or the skew of people opinion is more bullish. That might come into our consideration. And I guess I do notice that the actual move is mixed, but it also tends to overshoot. So
yeah, I think one thing I find interesting is even though sometimes you had very strong losses here, like 10%, -8%, through this whole time, Google was kind of consistently beat its earnings.
yeah.
I find that interesting. And a lot of times with these Mag 7 stocks, it's like something else determines what direction it goes in, not necessarily the dollars and cents. So, so yeah, do you need me to go to Volland?
Yep, let's go to Volland.
All right. Ooh, look at this. Looking at Vanna, look at that. That's very interesting.
Yeah, usually when it's like cascading downward, I feel like there's a chance it might go past those strikes, but will drag it down. If
Yeah.
it's the other way, then it's going to be like a breakout play, like a long gamma all the way type of thing. So for me, based on this analysis, like I would do long gamma trades because it's like usually tends to get past the implied move. I
Yeah.
think if you're bullish, it should be around, I don't know, past 170, like maybe to 185 at the most. What do you think, Jason? You think
I think 185 is a great target there.
Yeah.
A lot of times, so when we're looking at Vanna like this, first of all, this is when we're looking at calls here, dealers are positive gamma, which means there's a ton of short calls, and they're negative gamma on puts here, which is a ton of customers are long puts. This is a very, this is like a standard kind of hedging look. And typically on a Vanna look like this, I mean, it's very bullish. I think that 180 to 185, I think that's a great target here. And also when it cascades down like this, that's because these outside here, 215, 225, they don't have a lot of delta to make their premium, their Vanna premium very high. So once you get up to here to this like 185 area, I would expect these to grow. So 185, 180 is actually a great target. It's a bullish kind of look. I would, and then going long gamma, especially on an early earnings, you kind of want something like long gamma. Like a 185 seems like a great spot. That's a good. I agree with you on that one, Andrew.
Yeah, and also one great thing is like on a Tuesday, like if it's bullish earnings, it will shoot past those levels, and those positive Vanna flip to negative, so it kind of supports kind of the price. So your calls can still maybe stay even longer and have a higher chance of getting more value over time.
Yeah, that's a good point. It's a good point. Cool. All right, what do we got next?
But one thing is how about like the bearish case?
Oh yeah. So I mean, here's the thing: is if you if Google goes bearish, it has to cross much further south than 160. I think. I mean, it would have to get down to like 155 in order to start being bearish. But then if you give it enough time until Friday, I think it could bounce. I mean, these are the kind of strikes that you kind of have to target. If there is a major bearish thing, like earnings, I mean, I would expect to see some extra option traffic because nobody's ready for it. I mean, everybody's just hedged. Nobody's speculative bearish.
No, I agree because it's not going to be bearish until it past 160. There's no put support, so not many people are expecting a bearish move. But like in case of a tail risk like that, if you want to be bearish, you'll be like long gamma past 160 or something like that.
Yeah, I agree. I think there's a lot of if I were to do a trade like this, I would do all earnings trades. You kind of don't dedicate a lot of your portfolio to it.
Yeah.
But like these calls up here seem like speculative calls. In the 200, 190 range, like even up here. But these puts, because they're so close to the money, seem like very hedging kind of, the close to the money calls and puts are usually hedging. So I see a lot of speculation on the upside, but not a lot of speculation on the downside. These are probably, these are mostly like puts. I mean, I see that there's a little bit of call volume here, but that's usually because somebody's hedged call got passed and they're just leaving it. So, there are some speculative puts, a little bit of 140, but yeah, overall, it looks like people are selling puts here. 135 and 145. So I see very little speculative action on the put side, a lot of speculative action on the call side. Covered calls, that is, they're trying to capture premium. So, and they're trying to capture a lot of premium. They're giving a lot of room to the upside. So yeah, and when I say they, I mean customers, not market makers. So yeah, I do like the bullish case. If I'm going to do a move here, it'd probably be long gamma bullish, probably in this 185, 190 range, maybe 190 because of the extra time between earnings and expiration. But yeah, that seems to be a good move here. So, all right. So you go, bank it. Google bullish long gamma. All right. Next one, Apple, you said? Let's go to ORATS Apple. All right. Interesting. Apple typically, it's so when we see an implied move, typically the way we said this last week, I think dealers price it. There is a little bit of analysis, but most of the you could expect the dealer's analysis to be about one standard deviation. So like once out of every 3 earnings, you could expect it to exceed that range. But typically dealers are really good at pricing this. So, a lot of times it'll like just hit the edge of the range or something like that. It looks like Apple is pretty much there on that one standard deviation. They've got, okay, so they got like 4 right in the middle of the range and then 3 just outside. I mean, that's pretty good pricing there. What do you think, Andrew? Tell me what you see.
Yeah, I see the same thing. I see the implied volatility to be 26, which is kind of low for a Mag 7 earnings play. Looks like the revisions are still slightly bullish, but I noticed, like you said, it's in the range. So I feel like most people probably have no expectation of surprises. Should be inside the range for this, which is kind of rare for like usually a Mag 7 company earnings. Usually would go like either all the way bullish or bearish, but we'll see.
Yeah, it's interesting. First, you're right. The implied move is lower than it ever has been. 4.1, 3.9, 3.5. We're at 3.1% here. So we haven't seen something that low since October of 2021. So that's pretty strong. It's pretty small implied move. But again, the dealers have been pretty decent at pricing Apple. So I guess we'll have to see. Apple also kind of consistently beats their earnings just by a little bit. And they're
they
pretty
had an
consistent
Apple
earnings.
Day.
This is kind of, I'm sorry, say that again, Andrew.
They had an Apple Day like a few weeks ago, if I remember correctly. Maybe that's when they introduced their products. People had know the expectations of what Apple's gonna show in their earnings.
Yeah, and they also did that iPhone revision too, right? Yeah. So maybe earnings maybe the reason why it has a low expected move is because any kind of news that would come from the earnings is already known. So
yep,
we'll have to check it out. Let's see what Volland says. A very similar look there to Google.
Yep.
Yeah. What do you think?
Yeah, I feel the same. It's like similar look. It's like you do long gamma to like around is it 240? I think it is. What's this one?
Yeah, 240s here, 250s here.
Yeah, when it's past 240, you can go long gamma. And the negative case is like 210 or something like that.
Mm-hmm.
I also thought of a interesting place. Maybe you can do an iron condor because if you think it's inside the range to capture the premium.
Yeah.
But I'm not sure with the volatility of 26, would you get much from that? So.
Yeah. For the risk, I don't know either. But I think one thing I noticed that's different between Apple and Google is Apple seems to have a lot of calls that have been passed. Right over here, but it looks like customers see when a stock runs for a bit, a lot of customers, like institutional customers, are buying puts and selling calls, but they don't move it. They're not like rolling the calls up as the price goes up of the stock. Okay. So a lot of these calls here are probably that. And because these are all, again, mostly short calls, mostly I'm sorry, for the customer side, mostly short calls, mostly bought puts. And even though there is some support here, and that shows here, the call traffic over here can kind of shorten the amount of upside that this has. So I kind of think that like that 240, 250, this between here would be a good target, especially since if we saw, I think this is a Halloween earnings. Yeah. So this is earnings on Thursday evening. So you only have that one day, that one Friday. Mm-hmm. So you can wait until Thursday during the day. You could put on like a butterfly or a condor at the price that it's at. Just kind of leaning bullish a little bit because there is put support and there is call. There are short calls up here at 240, 250. So, I would see where it ends up on Thursday, but this is kind of the range that I would look at in between this 240, 250. Like an iron condor or butterfly, like you said, Andrew.
Yeah, I was thinking the same thing. We also can do a bullish butterfly or a broken wing butterfly on that area too.
That's an excellent call. Mm-hmm. That's a great call. Broken wing butterfly that's kind of bullish right here. That seems like a winning trade right there. All right, so there you go. Broken wing butterfly, Apple, bank it. All right.
Next one's
the next one you have on the list here is Microsoft. Let's check it out. All right. Wow, this seems about as vanilla of an earnings as you can get.
Yeah, there's no excitement. I feel like the past three is all like, other than Google, the volatility is like so low. It's like,
yeah. Tell me what you see.
Okay, the implied vol is 29, which is also on the low end. If you look at the previous earnings, it's like mixed. It's up and down all the time, but you do notice that it's actually inside the range. So it's very similar to Apple, which is inside the range. Mm-hmm. And it's nothing exciting.
Yeah, you're right on with that. I mean, the implied move is it is smaller than it has been, but the past 5 earnings has Microsoft hasn't moved past that implied move. It hasn't it's only pushed the edge a couple times. I mean, this looks, when I see something like this, the first thing I think is butterfly, condor, even, something double calendar, double diagonal, something like that. Yeah, that's my first thought. So, I mean, let's see what I could imagine Microsoft is kind of a typical, hedging kind of stock normally. And yeah, we're here again. Oh, look at this.
Yep.
There's a lot of speculative. Has Microsoft fallen in price recently?
Actually, I'm not sure, actually.
Yeah. Let's check the chart. Yeah, it used to be up here in like the 470 range. Now we're trading down here 422. Even as early as here, we had 440. So yeah, it's kind of dropped a little bit in price. It's recovered a little bit in the past couple of days, but yeah, the reason why I ask is there's a lot of puts up here in the 450, 460 range. I guess somebody, when Microsoft was topping, somebody got a little bit, protective of their Microsoft stock and decided to buy a lot of puts, and that's created a lot of negative VANA here. It's very interesting.
That puts a ceiling on bullish moves.
Yeah.
I was thinking the same thing too.
Yeah, like I would almost do like a leaning bearish a little bit. I wouldn't go too bearish, long gamma bearish, but this looks like a short gamma bearish outlook. I don't know. Yeah. What do you say? What do you think?
I was thinking the same thing. If you're bearish, you can do a short gamma play, like a put credit spread on that long negative VANA strike. Because if it's never it's gonna be hard to go over it. So it'll be fine. Yeah. Another thing I'm very curious about is that I always sometimes feel like Google and Microsoft like inverse related kind of play. So if Google's earnings is bad or good, then it's a flip for Microsoft on the other side. But that's when it comes to AI.
That's interesting. Oh, because can you explain that a little bit?
Because I feel like they're competitors in the AI space. So if Google is doing well, that means that something with their AI tech is doing better. And so, but since Microsoft's competing with Google, it's like the opposite, maybe. As a fundamental.
That's very interesting. Okay, so Google, we said, kind of looked pretty bullish. So you want to do kind of something a little bit more bearish leaning, but short gamma. So something like a credit spread. If you're doing like bearish, you would probably want to call credit spread up here, like 460, I guess, 450, 460.
Yeah, call credit spread, yep. But also at the same time, we have the advantage that Google's earning comes first before Microsoft. So I wouldn't put the option play now until after earnings. So it's like the next day. So you still have some time to play that.
Yeah. Yeah. I mean, I tend to avoid straight credit spreads unless I'm getting a good price on earnings, but that's, personal preference just because I've been burned too many times.
Yeah, that's why I generally do iron condors too, or flies and stuff like that.
Butterflies are my favorite if I'm doing short gamma, but yeah, that's but it's also less chance of winning that way. So,
and you still have some time to do adjustments.
Yeah, that's true.
It's on a Wednesday, so
yeah, Wednesday evening. So you got the Thursday of the earnings move, and then Friday you can make an adjustment. So, all right, so there you go. Credit spread, short gamma bearish from Microsoft. You bank that.
Credit spread. Call credit spread.
Call credit spread. Call credit spread. Right. Yeah. All right. So the next one is Meta.
Meta.
Go to ORATS first.
Yeah, finally some excitement.
Wow, look at this. Red. Oh, these are insider sales.
Insider sales
on ORATS. Well, it's kind of climbed. Insiders have been selling all the way up. That can't be a good sign. Oh, wow.
Yeah.
Anyway, tell me what you see.
Yeah, what I noticed is in pi volatility is 46. That must mean that people are not sure what's going to happen on this earnings play. Less
Mm-hmm.
easy to predict, so very good for long gamma or if you long gamma plays too. So um, yeah, and also like that previous earnings is like kind of choppy, so
Mm-hmm.
not sure if it's going up and down. But the revisions is very high, 13.
Yeah, that is very high. Although it seems that's the trend. That seems to be a norm for Meta. I mean, it looks like I agree with you that long gamma might be the play, and unlike the other stocks where they expect it's almost like they expect a large range and then it exceeds it sometimes. Um, the big exceeding range was when it was a very small expected range. I don't know what happened here. I mean, obviously they beat their earnings. I guess they had an all-time great earnings quarter here, but yeah, I mean there is a couple here where it just like kind of stays in between, but looks like there's most Meta's mostly an unexpected stock. Like it looks like there's a lot of long gamma kind of action here. Only three in the past 1, 2, 3. So three in the past 8 quarters have fallen within the range, and those ranges are pretty wide. The bars here are smaller, but you have to kind of look at the y-axis. Uh, the average expected move is 8.5%, and the actual average move is 13.2. So that usually kind of points to long gamma here. So let's see what we got in
Yes, it does.
Volland.
Yes. Yep.
Yeah. So this is interesting because it looks like there's a lot more speculation here on Meta. What do you say?
Yes, I see the same thing because it's not even like a cascading up or down. It's just one big positive and a strike at that point.
Yeah, I mean this strike right here. What is it? 600, I guess. 600 is a huge covered call area. But the other thing too that I noticed is there's people selling puts here. There are a lot of put traffic down here, which is kind of speculative. There is some like covered call activity up here, but it's not, there's somebody up here buying 10-30 calls. I don't know what, I guess that's Mark Zuckerberg. Um,
But
but
yeah, you do point out something that's very interesting. I noticed on the gamma put side, that 570 strike. So
mhm.
it's as close as in the money that it doesn't have a Vanna influence. But if you,
Yeah,
but Meta's earnings is on like a Thursday or Friday, so
I think it was Wednesday, the Wednesday evening.
Wednesday. So there might be a chance that it might have a Vanna influence if the spot price moves away from it, like
Yeah.
0.2 delta away from it. So we
Yeah,
might
that
want to
kind of
watch.
that kind of keeps a cap on the positive, because if this moves in this direction, then if it moves bullishly toward the 600, then that will grow right here. But if it moves bearishly, it will flip to positive. So this may end up actually being a little bit short gamma, but you might want to lean bullish because this strike right here is huge.
Yeah, that's why this is very hard to make a play on this until we get more closer to earnings and volume
Mm-hmm.
shows the updated. But yeah, for me that large strike, if it gets more bullish, I would actually maybe do a fly or something to a wide fly because it's such a
I think that's
strong.
a really good move. Yeah,
But
probably
since I
like a.
don't, but
Go
since
ahead.
I don't know if it's going to be bearish or bullish until Wednesday, it's very hard for me to make that play until later on.
Yeah, probably one of the moves I kind of like to do, especially with earnings, is the broken wing butterfly, but where the broken wing is facing price. So if I'm expecting like 600 here is probably a cap, right? Could
Yeah,
we agree on that?
yeah,
If it goes bearish, it may go, as far south down here as like this probably around here, like this 550 area is probably the extent it would go bearish because this would turn into a very large bullish Vanna strike, right?
yeah.
My move would be like a broken wing butterfly that centers around that 625, 635 area, not because of anything here, but just because of Greek dynamics. and break the wing a little bit bearish, so that when the earnings are announced, you get that implied volatility boost no matter what. If it's bullish, then your center of your butterfly is far enough away that it shouldn't, if price has to pass 600 a lot in order for you to get to realize the risk, which we don't anticipate. And if it centers around 600, your butterfly is centered around like 625, 635. You're going to realize quite a bit of gains there, even more than what your expiration would look like. So I think that's usually the play that I do, and then I sell it if it goes negative theta, which usually is what happens right after earnings, and you see that implied volatility drop. So that's kind of the play that I would do here, because I'm expecting short gamma, but it may lean bullish. So that might be my play. What do you think? What do you think about that, Andrew?
Yeah, I think the same thing because of the it tends to overshoot a little bit that you can't put the fly on the strike. But I would
Right.
actually wait a little longer to find out exactly where the spot price is before I put the fly to get a better sense of how long the wide of the broken wing should be.
Mm-hmm.
And if you're doing short gamma, generally if the later you put it in, the more premium I think for it.
That's true.
Because,
Yeah, that's true. All right,
about
that's a
the
good idea.
high.
Yeah, and so we got one more. We got Amazon. I'm checking your ticker here. Then we'll go over here and Amazon. All right, what do you see?
Yeah, I just see that the earnings plays near the end of the week is more exciting than the beginning. So implied volatility is 39. It also could be that it's getting closer to elections too. So
That's true too. Yeah, but I like typically what I look at earnings plays. I do that expiration only. So election is next week, earnings is this week. But the other thing to account for is there is non-farm payroll. So on Friday, so you kind of have to be careful with that too.
and also Thursday is end of the month too, right?
True. Yeah. So this might be a little bit of a volatile week.
Yeah, because the Amazon's on 31st, the last day. So
yeah. All right. So tell me what you see. What do you got here?
yeah, I noticed that the implied vol is kind of on the high end. Well, not the highest, but higher than all the other Max 7 on average. I do notice that the previous earnings was mostly bullish to the last one, so it could continue its bearish move, or it might go like a mix. So I yeah, so I'm starting leaning to long gamma, but I want to see what Volland shows it to be.
Yeah, long gamma is a good lean because it looks like 4 out of the last 5 earnings has exceeded its expected move. Even though also 4 out of the 5 earnings, it looks like they estimate their earnings terribly, or they do, the kitchen sinking where they underestimate their earnings and then they outperform it considerably at the end. And here they keep estimating, they keep revising higher and higher and higher. Looks like they've done really good job with their earnings, I guess, since Bezos left. And Bezos was always kind of more like a tech CEO where keep earnings down but keep innovating and trying to gain more market share and technology. And when Bezos left, I think that's when they started caring more about profits. But yeah, let's see fundamentally here. Yeah, the average implied move is 6.9. We're under it, 5.8, which is usually the case when ORATS estimates it. Actual moves, though, have exceeded that to 7.8%. And it looks like they're expecting a big quarter here. So maybe not a record quarter since last quarter was 126, but revisions, they don't seem to have a big revision thing. But this is, minus 3 revisions down is a high mark there for Amazon. It looks like.
Yep. So since Amazon tends to break out and has long gamma plays, could be the play. But what
Yeah.
is very interesting is that it seems like no one knows what's going to happen on this earnings call because of the revisions and stuff like that. So let's see what Volland shows.
Yeah, maybe it's speculative. All right, here we go.
Wow, this is like similar to I think it was like Meta, was it, with that one big large strike?
Yeah, but it seems like I'm interested though because there's a lot of puts down here, and that's too close to the price here. So I mean, this might spike and then come down or something, because this 200, even though it's, you know, with the long calls here, there's some long puts down here that are right next to the money, or short puts, I'm sorry, with dealers that are right next to the money that aren't showing up as much in Vanna. So while it may reach this 200, that looks like, again, it's kind of like Meta, that may be a cap to any kind of bullishness that may come out. I'd probably do a similar move to this that I did for Meta.
Yeah, for me, since I don't know what the price will be at when it gets close to earnings, it's really hard for me to make a play. Out of all the Mag 7 earnings, this one, Amazon, I might just skip or something because I don't have a clear read on it. But yeah, because if I was going to do short gamma, but since it tends to break out, it would probably might burn me.
Right. So that's the big difference between Meta and Amazon. Like, and this is why, you know, we like to use ORATS and Volland in conjunction, because even though in Volland the positioning looks very similar to what it had in Meta, the history here of Amazon is exceeding their expected move, where when we were looking at Meta, there was more kind of like, you know, in the middle a little bit, kind of on the edge. So we were kind of, you know, a little bit less certain here. But yeah, I mean, Amazon, I'd probably do a similar move to what I would have with Meta, something like a 215 centered broken wing butterfly, where the broken wing is on the bearish side. So it's something, you know, to be more like precise, something like a 215, 205, you know, on that side of the butterfly. But then my other wing, I'm buying like 235, you know, 20 points, 10 points, something like that.
Yep.
I usually like to try to get a little bit of credit. But sometimes if you're unsure of how much it will move, I'm okay with no credit if it, you know, if it gives me some gains, if it moves in my direction. So, yeah, to be clear, that's the kind of move we're talking about when I say break the wing toward price, as opposed to breaking the wing away from price. If I were breaking the wing away from price, it would be more like a 195, 215, 225 kind of butterfly. So yeah, and this one's also on Thursday, so you got plenty of time
plenty of time to actually figure out what the next play is.
Yeah, and you don't want to find yourself, if you put on a butterfly like that right now, you don't want to find yourself with Amazon rallying to say like 200, and now with your fly, you're like, I have to adjust the whole fly or take it off and adjust it.
Yeah.
You won't even make that much money because the earnings implied volatility hasn't come down yet. Exactly. So you end up actually losing a little bit of money. So, and that's the difference between doing it for earnings and then without it. So you want to make sure that implied volatility comes down. When we're talking all these trades here with options and butterflies and stuff like that, Andrew and I like to play with options because it not only gives you directional advantage, kind of like with the stock, but the implied volatility moves are a lot more predictable with earnings, because the current implied volatility is higher than what it will be at expiration by an excessive amount. So Andrew and I like to try to play into that too, try to get implied volatility down a little bit. So
Jason, one
So
more
let's
idea is, do you think a calendar will work on this too? Or you
it
don't think
could.
it's
So calendars are typically, I Andrew has actually made me he's converted me from not using calendars to using them for earnings. And the reason why is calendars tend to be Vega positive, which means that implied volatility, they make money when implied volatility goes up as opposed to down. However, in the cases of earnings and catalysts like the election, implied volatility is priced well in time spreads for those events. So, it's the front month will tank a lot more than that back month, and that's how you make money on calendars. So he has kind of made me a little bit of a convert in that. That was a Andrew thing too. So, and then when Lex said, that,
but
I
it's only
guess
for specific plays like earnings, though. I mean, most of the
right,
time, calendars are Vega positive. So
right.
it's just the mechanics of the volatility differences is so high in the vol crush that it could play like that.
Yeah. All right. Oh, excuse me. All right. So let's see if we. Well, anyway, before we see if there's any questions or anything, tell me what kind of calendar and/or diagonal play you may do for this one.
Oh yeah, I was probably thinking of doing it like close to that big strike. It doesn't matter if it's one calendar is either a call or put, and I would actually put the long and a little bit further out, maybe a month or so, even, but especially past the election, because usually the
Yeah.
election the crush will go lower.
Yeah. Yeah. Because if you do a past election, which is only 1 week after this week, if you do a past election, that implied volatility will be could remain elevated. So that's a good idea. That's why yeah,
And
a time spread here might be really good.
but if you're not very comfortable or not sure about it, it might not be a safe play because it's like
Yeah. Typically when I do time spreads or even like balanced butterflies, again, like 200 is my target. I'll put it at like 210, 215, something like that. Because, if it overshoots, I want to catch that. I don't want to get to 200, then it exceeds a little bit like Tesla did last week, exceeds a little bit. And then I'm like, uh-oh, now I predicted it right. I played the implied vol right, and I'm losing.
yeah, because I feel like most new options traders like spreads, the time spreads are very hard to calculate because you don't have P&L graphs to figure out because it's hard to do because it's different expirations. So there's no calculator to actually calculate exactly compared to all the same time expiration options. So you would have to know very well the theory or how the Greeks work and be comfortable with the risk. So that's why.
Yeah, exactly right. All right, so let's check out before we go. Oh man, 43 minutes. We got like 7 minutes to check
I think
out.
you have a question actually.
Yeah, we have a bunch of questions. Do you elaborate on the broken wing butterfly as your wide side and your expected move side? So I kind of just explained it with the Amazon and Meta one, right? The which side I'm breaking the butterfly. Because like here, if that price is right there in the middle, it's like I would break it toward price if I'm in those two moves. Sometimes though, I think like earlier, what was it Apple or Google where we had a broken wing butterfly that we had a target but thought it could overshoot. That one I would break the wing away from price. So I think which do you remember which one that was? I think it was Apple. Oops.
I thought it was Meta, but let's go check Apple and see.
Well, Apple, the one that we wanted to break away from. Yeah, Apple was the right one because we wanted to break this away from price. Like we wanted to, so if we did like a 250 butterfly, you could do like a 260 on one of the buy wings, but then like 230 or something like that on the other buy wing. and that means it's very bullish. It costs more though, so you kind of have to keep that in mind. All right, did we answer your question there, Julian? Hope that you could tell me in a little bit. All right, next question. I asked about this in the Discord, would appreciate more elaboration. Could you please clarify how you assess the strength of the line in the sand levels and the likelihood of reaching the targets? All right, so this is zero DTE talk, not quite earnings talk. So it's a little bit off topic, but I mean, I can give you a really quick talk about it. It depends on the macro environment. So right now, the macro environment is negative VANA on SPX. And because of that, we are expecting more pressure on the line in the sand in kind of a bearish side of those paradigms. And so essentially that's, we're using the macro backdrop on the zero DTE positioning. So that's kind of how we look at that. But yeah, that one, if you need more elaboration, we can talk in the Discord a little bit off topic. Right. Okay. Do we have any other questions? Do you look at Charm too for analyzing movement? So typically we use VANA in earnings. We use Charm for zero DTE, but we use VANA for earnings because primarily the move that we're expecting is due to a drop in event vol, implied volatility, excess pricing, because there is a catalyst or something that will move the stock. So VANA helps measure the movement of the implied volatility more than Charm. Charm is a timing thing. So I would use Charm maybe at the end, like on the Friday, if you're still holding your position. I would think about using Charm, but VANA, to me anyway, seems to make the most sense. And Charm doesn't capture the implied volatility move as well as VANA does. All right. Let's see. You're welcome. Can you talk about VANA? Oh man. We only have 3 minutes, dude. Come on. I mean, I don't know. VANA is I'll give you a really quick high level view. VANA is it's a cross derivative. So it's either the movement or it's the change in Vega positioning based on the change in underlying, or the change in delta based on changes of implied volatility. With earnings plays, we tend to look at the latter of those two definitions, the change in delta based on changes in implied volatility. And that's because implied volatility will crunch in earnings. It will go down. Like, there's no doubt about it. Unless like earnings says, Mark Zuckerberg comes on and says Meta is going bankrupt, then implied volatility might go up. But then implied volatility might go up. But other than that, I think that these moves are, implied volatility will come down, and the dealer positioning on this, especially with Mag 7 earnings, because there's so much dealer positioning on, and they tend to be, one directional. I mean, this is everything that we said is kind of saying push a little bit in one direction or the other. It's, VANA can tend to be a huge indicator to which direction earnings goes, no matter what the fundamentals say. So I don't know, Andrew, do you have any comments on that? Or
yeah, I agree with you. The point's the same thing, because of the earnings usually have vol crush scenarios, other than like you said, there's extreme tail risk like events that no one's expecting. Most of the time,
right.
It's like the implied volatility will go down.
Yeah.
So I like to look at the implied volatility. The higher number, the more comfortable I am doing short gamma plays for more premium.
Mm-hmm.
So that's one of the scenarios I look at too. So
yeah. All right. So do we have any more questions? What are we looking at? Aggregate VANA is positive in Google. Is that important to look? I mean, yes. I mean, the aggregate VANA being positive, and the more positive is, the more bullish even earnings can be, which is why we kind of like leaned bullish, I think, on Google. But when you kind of have to know the dynamics of VANA, because as you cross those positive strikes, they will flip to negative. And so you kind of have that initial impulse is bullish, but you have to know which strikes those VANA, aggregate VANA will flip to bearish or neutral. So, I mean, that's I guess what my comments. Do you have anything to add, Andrew?
Yeah, because it also depends on a relationship to the spot price. If the positive VANA is below it or above it, and you also need to understand there's a spot vol correlation, which is an inverse relationship. When the vol decreases, it's usually the stock goes up, and if the vol increases, the stock goes down. So then, when that direction happens, you see where is the largest VANA strike and how it's going to influence the price.
Mm-hmm.
So yeah, so it depends on where that positive VANA is located in relation to the spot.
Right. Yeah, it looks like Google was that butterfly that we were talking about, the breaking the wing away from price. It's supposed toward it. All right. Let's see. Do we have any other questions? No. All right. 51 minutes. We're setting records, Andrew. Good job. Good job stepping in for the internetless dark matter. Dark matter. You gotta move away from the trees, bro. Move away from the trees. All right. So for Andrew, thanks for watching, and may Volland help you in your future trading ventures.